What's up, everybody? Hello to anybody who is watching. Good afternoon, good morning, potentially, wherever you are. This is Justin with Markets for Millennials. And looking at the DXY right now, at the beginning, while the music was playing, I was looking at the SPY growth and SPY value and the comparison, their little ratio. Take a look at the DXY. Today on the stream, I think we'll take a look at the sectors. I think that's what today I'm going to focus on. Maybe that'll be the Tuesday thing. We'll just kind of see. But just looking at the DXY to get some situational awareness on the 8-hour, continuing to wick into this trend line that I added yesterday. But we have not closed above it even on the 8-hour and not on the daily either. And so we've got the higher high right here coming in at 93.19. And the resistance that I actually think matters is here at 93.30, a little bit under 93.30. So that's what I'm looking at right now. So what we'll do is look at the sectors. I think that'll be good. Take a look at the sectors. And so we'll start out looking at SPY growth over SPY value. This is something you could put in TradingView. Basically anything you want. You can, you type in SPYG, and if you want to put the slash sign on your own, or I just usually hit the little divide sign right there just in case, SPY value. You just put that in and that's what comes up. And so it's pretty awesome. If you just kind of pull back, you can just see ever since the great financial crisis, and actually, so if you look at it, growth in value happens in stages. And we're just doing this before we look at the sectors because growth typically has particular sectors within it. But I just want to show you that ever since the dot-com bubble burst, we had a long trend of value outperforming, a stretch of sideways action. And then as soon as the financial crisis started in '07, you kind of see this trend to the upside. And it kind of was grinding higher towards growth, and then accelerated, in late 2016 up until late 2019. Then we had mass acceleration. It's really interesting to look at where the acceleration of growth compared to value came in, right? Most people looked at it like, oh, when COVID hit, that's when you saw growth really outperforming. But growth has been outperforming, and I just think it's interesting to note that this trend line like this, it's just up. It's parabolic. We'll just call it that. On the 3-day, it's parabolic. If we zoom out a little, you can kind of get a better view of it there. Just enormous to the upside. Even before, if you just look at where the COVID crash was, just right here. This is a drop in the bucket, right? But it was already beginning kind of a major upward move before COVID. I just think that's interesting. So maybe insignificant, I don't know. But ever since then, growth outperforming, and then right around the same time that yields, you can actually cross this with yields as yields started to come up the end of August, and then in September. Ever since then, growth has been kind of consolidating, and then actually ever since the end of June, right, and during the month of July, we saw outperformance of the growth side of the market. So we've actually kind of broken. Actually, I gotta adjust this a little bit. Let's see if I can do this right here. If we do it that way, I don't like that. This is a little bit better. You can see, we had this move into resistance, failed, broke out, kind of retested right here. So obviously growth broke out, but we haven't made a higher high since second to last week or the last week of July. So we'll see what happens going forward. Before again going to the sectors, I want to just look at yields, because again, yields are on their way back up. We're going to be retesting. We're coming up to test this ascending trend line, which was support. Is kind of the prime trend line of support coming up since August of 2020. We broke down from that after bouncing, broke down in mid-July, retested it late July. We're coming back up for another test. So that's what we'll be paying attention to there on yields. And yields matter as you look at the sectors, because you have obviously growth. Growth's at an inflection point. We need to get over this resistance line. It's pretty clear. The market's respecting it. Market's also respecting this ascending trend line, although it's not the most shallow of the trend lines that I have. I've got that one right there as well. I know that they're different colors. So that's pretty important. You can see value also kind of coming up, but growth still sort of outperforming. Maybe not today exactly. So then again, as you kind of look, that kind of shows you what's been happening with growth. So let's just take a look at the sectors. So what I did was I flagged over the last couple of weeks, I've been flagging the sectors that have been kind of lagging, and my criteria was when I started looking here. I think this was, I want to say in late May when I started, I made this list in my trading view where I just had the sector ETFs listed. So I think it was right around the end of May, and I was looking to see horizontally at least where the high was, and so that was when I started flagging what had not made new all-time highs. And so everything I've got flagged over here on the right side, I have XLU, XLP, XLI, XLB, XLE, XLF. Those for a long time had not made a new all-time high. XLU, that's utilities. That's the utility sector. This actually usually does pretty well in recessionary environments, but you actually see what's really interesting is right before the COVID crash. I'm actually going to put this. I'm going to put this overhead right here. It'll be a little bit of a thicker line as well. That line is the high, pre-COVID high. We actually have not come back to that. It's very interesting. I actually didn't consider that before. But utilities haven't made a new all-time high since February 2020. Haven't made a new all-time high on the near term since April 21st of this year, 2021. But it is coming right up. It did break, you can kind of see it broke above this trend line, which was resistance, and now it actually retested and then has resumed off from that trend line. So now looking to get above this resistance at 67.79 next to see what happens. XLP is consumer staples. This one actually, it's interesting. It appears it's closed above the highest daily close that we've had in the near term recently, but it's not higher than the high, like than the highest wick. If I put this back, let's put this here. If I put this here just to match the previous high daily close, you can actually see we've broken up above it and closed above it. So I'm going to turn this green. And I'm going to unflag this for now, and I'm going to make it yellow actually because I want to watch it over the next few days. I basically had stuck this line here when we caught this support line. It's kind of local horizontal support. That's where I established the lower trend line, and I created this ascending trend line, and you can see that the market has kind of been respecting that over the last few weeks since the end of June, and obviously we're getting this breakout now. So what I'm looking for is I want to see what happens in this range. Are we going to get a retest and a resumption off, or are we going to fall back down? Consumer staples, honestly, consumer staples should be doing pretty well, all things considered. If the economy is, the consumer staples should outperform a lot of the other sectors, no matter what, because they are consumer staples. It's not consumer discretionary, so that would be typical. Obviously, that was a little different because I think Amazon is in consumer discretionary, and it was obviously doing really well during the COVID shutdowns and whatnot. We are above our COVID highs, but this is something I'm going to want to watch going forward. XLI, it's industrials, and obviously where we had our big move was right around just before the election. Kind of front run the election a little bit, and then had a huge up move, and then we went sideways, broke out of the sideways consolidation, and kind of been marching up. But also ever since, let's pull back, well above our pre-COVID highs, but obviously have not made a new all-time high since, let me actually move this right here, have not made a new all-time high since the 10th of May 2021, and we did break above kind of this slightly steeper, so my lines basically looked like this, and then like this, and now basically it's this line that we have to worry about. But we are on the underside of this ascending trend line, which is coming from back during the March lows. You can see that the market has respected it as support. We did break below, popped above it, and now we're kind of on the underside retesting it. And so what I'm looking for this to do is, if industrials are going to have their day again, they need to get above this resistance and above this trend line, and then ultimately above the horizontal resistance above. So I'm going to be looking right here to see what happens over the next few days. Because it hasn't closed at a new all-time high, I'm going to, let's see, maybe I'll put that right here just because I want it to be at a daily candle on the body. So we'll put that right there. So I'm going to keep this red, XLB. This is the materials sector. We broke out of this descending line here. So what I'm actually going to do now is I'm going to see what we got here on the downside. That's the trend line we're looking at now to the upside. We still have not made a new all-time high. Let me darken this up a bit. We can see that. That goes back to the March lows just like the other one. Again, the market was respecting it. Now it appears, let's see here, and whenever you're in doubt, what you should always look for is where do you have symmetry. So what you do is you just clone a trend line, and then you look and see where the symmetry is, and so you can actually see this symmetry is playing out over here. And then you also can see here, if you go from these wicks right there, you can see that it played resistance and then was support all throughout here before breaking down. So I think this is a legitimate trend line, just my opinion, but I do think it is a legitimate trend line. So I'm going to leave that there on the downside, and we'll go from there. No new all-time highs. Let's take a look back. Well above the pre-COVID high. So same kind of story as XLI with the industrials. I would say materials and industrials are going to be together for the most part. They're going to kind of have similar price action. Not exact, but it'll be similar. So just like that, I'm also going to be looking to see if we bounce in between this range more, or if we pop above and then retest and then come up, either consolidate and then pop up, or come above and retest and go. We'll see. That'll really give us a better indication as far as inflation and the reflation trade, and whether or not the sector rotation that we saw towards the back end of 2020 and into 2021, if that was legitimate, or if that's going to keep going, or if we're going to move back towards growth outperforming. So I'll leave that flagged as well. Energy has been getting killed lately. One of the best ways you can tell like what's going on. So if you actually are looking at oil, and oil obviously has been getting destroyed as of late as well. Huge sell downs, regaining huge sell downs. Again, we're not making a lower low on oil, so that's something I'm curious about. But usually, one thing to watch for is how much is XLE tracking oil. And so I don't even know if I can, I wonder if I can do a comparison here. Let's do WTI. We're going to do all here. So let's do oil futures, continuous contract in front. Yeah. So what you'd like to see is you'd like to see to what extent is oil performing on par with XLE, or is it underperforming, or what? And so that's kind of interesting. There was a period of time. Let me get rid of this. Actually, it's a little distracting. There's a period of time where the XLE was and the stocks, the energy stocks, were not following oil, and I found that to be interesting at the time. So that's something that you'll want to watch for. This is not doing as well. It's not as strong. We came down. We're testing this trend line, which again also goes back to the March lows. It does have some symmetry. You can kind of see at various points. So that's my trend line. You can see the market is respecting it right here, but it is not as strong. Whereas you had like materials, and then you also had industrials, which if you look at this, let me do a box, that'll be easier. If you kind of consider like the box, like the halfway point of the box, materials are up more than halfway from their retracement. The same thing is true of industrials. Were above the halfway point, but energy is not. If you go from the high here to the low, we're still in the the bottom half of this box. So it's not as strong. It's pretty clear it's not as strong. The question is, will that continue? Will it not? Not really certain where that's going to go. The fact that we're bouncing along this trend line, it has me thinking that we could, let's see, where did my marker go? Oh, here we go, the brush. We could see this trade below, retest, and then maybe bounce here at this support at 46.47. Not really certain. It looks like it's pretty good support right there. Was resistance, then support, and support. We need to make a higher high. So most definitely, what I'm looking to see is us get above there in terms of a horizontal level. But obviously, we need to stay above this ascending trend line, and we need to get above this descending trend line. So that's going to be what I'm looking to see. So I'll leave that line there just as a general guideline. Obviously, that's going to stay red. Financials, look at financials. Financials are about to, I think it's just like utilities, actually. Very, very similar to utilities. Financials are recovering and moving up into resistance. Pretty decisively out of this descending trend line, which it was respecting. You can see here very clearly if we zoom in. If I draw this in, we had this breakout, retest, resumption. You would not want to buy industrials here as you're into resistance. Where would you buy if you're going to buy here? Whether you're buying, you could take this for like, if you're buying XLF, the ETF, or if you're buying any of the financial stocks, what you're looking for is a breakout, retest, resumption before you buy. If you bought on this breakout, or on this retest and resumption off, this is a take profit level. Take some of your profits off the table, move stop loss to break even. That would be the CTM way of doing it. And so that's kind of what's going on in the financials. I feel better about financials, but I'm going to make it yellow because it's not out of the woods yet. So those are the ones that I previously flagged. So obviously Anything that's flagged over here in red is they're dogs right now, and then yellow is coming upon their, coming upon a breakout, coming upon a new all-time high, but not there yet. And I do want to remind you that what we saw in utilities specifically was that we haven't even gotten up to pre-COVID levels. So I think that that's very important. Let's take a look at the real estate sector. Even though a lot of people have been talking about real estate topping, the XLRE, the REIT tracking ETF is still doing pretty well. I do want you to see how the slope is changing of this move, right? So you kind of see slow grind and chop sideways for the first part, but then right here you can see that we start moving up, right? But obviously that momentum is not carrying on. You can actually see we're starting to roll over a little bit. It's starting to curl over and like cresting over. So that's going to be something that I want to look at. Plus, with this close right here, we've taken out the lows of the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, the last 10 days or the last 2 weeks. And so that's going to be something to watch for. I'm going to add a line here, and that's going to be our resistance. And I think if I were to add a support level, I think maybe I'll put it here, make this green. That'll be the range that I want to look at. And maybe what I'll do is I'm going to flag this yellow because it is starting to come down. XLY, consumer discretionary, which again, mostly carried by Amazon. It almost looks like the Amazon chart, to be honest with you. Amazon is a massive, massive portion of that. So we have a little bit of a ceiling above us right here. Make that red. Consumer discretionary. Where would be our support? Let's see. Probably right about here. Let's do this. Right there. That looks pretty good to me as far as a horizontal level. You can kind of see resistance, support, support, resistance, resistance, support, bounced off of it. So that's going to be the range I'm going to watch there. Also not at an all-time high, kind of trading down so far. So I'll flag that yellow. Healthcare. Healthcare, you can actually kind of see we've got these periods of time where price is sideways and then kind of up, consolidation, sideways, and then up, and now sideways. Healthcare looks pretty good, to be honest with you. Wonder what happens if we put our 50-day. Look, it's well above our 50-day moving average. So what you should expect is to see price kind of come down and get close to that 50-day, maybe kiss it. It's been a while since we touched it. We got somewhat close right here, but not quite there yet. So that's what I'm going to be looking for right there. We've got a support. You can clearly see the support here. I have it on this yellow line, but maybe I'll make this official. I'll stick that right there. That's clear support right there. To me, healthcare still looks good. I'm going to leave that unflagged. And then XLK, that's tech. And one of the things that's happened as of late, let me move this there. Let's get this right there. You can see the reason why I'm doing that is even though this candle wick down here is below it, the body is below, from this close to this close, you can actually see the symmetry right there. And in this case, we actually have broken down from a pretty important level. I'm going to flag this yellow because I'm going to want to watch that. And this kind of follows what's happening on the NASDAQ. To just take a look really briefly. Look what happened here on the NASDAQ. If you watched the stream yesterday or saw my weekly update last week, you saw that I was saying that the market is paying attention to this ascending trend line, and that it would not at all surprise me because of the way that this kind of looks like a wedge to me, especially as of late. It would not at all surprise me to see that to see price break down out of here and come down to test the lower range, because you can see this channel right here. It's pretty symmetrical. You can see the market symmetry all throughout, and so it would not surprise me in one bit to see again, to kind of redraw this, because I didn't really do justice to that, to see maybe a breakdown and then a retest and then resumption down till we get to maybe I want to say like 6 to 9% down would be what I would look for. Let's take a look at the NASDAQ 50-day moving average. The moving average is pretty low. It's very similar to the XLK, so let's go back to that really quick. You can see that is, you can see that's taking place in the technology fund. So XLK is going to follow the NASDAQ pretty closely. And then XLC, and this is going to be the last one. Communication services, pretty decent uptrend. It looks pretty healthy to me. Yeah, we've got some good market symmetry here on some of these trend lines. I don't think there's anything wrong here. This looks good to me, and so I think I'm going to leave this untagged. And then so the other thing I wanted to do briefly is what I also did was sorry, you're going to see some kind of updates here, some little windows that pop up. What I did also, I didn't put it in the same in the sector overview list. I just made a different list. This is something you can try out sometime. SPY slash and then whatever the sector ETF is, because what this will really do is will really show you what sectors are outperforming the S&P. And what this helps you to do is as you see the trend change. So like for example, you have kind of this uptrend here. As you see that trend change and go this way, then that is a signal, especially if the SPY, as you can see here, if the SPY is first, then once an upward trend, sorry, it's getting really messy up here. Once an upward trend is broken to the downside, basically once this breaks, that's the opportune time to overweight that particular sector, right? And so now in this case, what's been happening lately, SPY to real estate, we've had this kind of descending trend line, which has been the upper band. So the way that you read this is maybe because this previous trend turned towards XLRE, so you maybe go overweight XLRE here. Again, this is more if you're short-term trading. If you are a long-term investor and you're just going to hold for 10, 20 years, whatever, and you're just going to close your eyes and buy and then turn your computer off and not look at your brokerage account for another 10 years, then this doesn't really matter. But if you're interested in maximizing returns and figuring out what of your portfolio should be weighted a certain way, then once you break this, then you go overweight into this versus something else. And I'll show you how you can like kind of figure this out. But as you can see here, we're breaking this trend. So this is where when you break the trend, that's where I would go even weight, right? Not underweight, but I would go even weight. And so kind of what you see here is, let me just show you using SPY/XLRE. That's kind of like a good horizontal level to me, right? So in my opinion, as we turn this way, then maybe once we get a lower high here and continue down, I go a little overweight. And then once you cross down into here, cross this horizontal, what was support, then you really go overweight. And you just kind of watch price. And then as soon as you see price break this trend line, then you want to go equal weight, not overweight. So that's just something that I've looked at doing. I don't remember why I flagged these the way I do, so I'm going to unflag them. Right, so here you have SPY XLY, and so you've had an uptrend, like look at this massive downtrend from the March lows, and now the S&P is starting to, like generally is starting to outperform as a whole the XLY. So in this case, I would be either equal weight or underweight XLY. If we continue XLU, again, S&P is outperforming XLU, the utilities overall. And so that's one thing to consider. XLK, like look what's interesting here is that this is, again, the technology sector, XLK is. We're in this sideways range. And so it's basically been, the XLK has basically been break even. But you can see how steep this was on the downside. And the reason why is because the S&P is so much weighted towards the technology space. So that's something that you'll want to consider as well. It might actually, look at kind of like we've broken down below this this trend line right here. We did close above it, but let's see over the next couple of days. It might not be too bad to be at least equal weighted or maybe overweighted in technology. I don't know how many people would say that, but that's kind of my view. Against XLP, the S&P is outperforming. Against the XLI, right, the industrials, these were outperforming, and now we've broken out of this this wedge, and so again, that's another signal. Just like where are you? Let's see, XL. Need to have some more space on on these charts here. Utilities, right? What's interesting is to see that the S&P has been outperforming in the utilities for some time, unlike the industrials, which were outperforming, and now they're not. So to me, this is a sign of going back to growth, right? XLC, that's communications. Again, I'm just and what's interesting is that when you use these ratios, you can actually confirm whether or not like these are doing very strongly or not. Like I just mentioned a few minutes ago, XLC looks really strong, looks really good, and this chart kind of continues to show that the upward the downward momentum here is still intact. I mean, it's not exact, but that's basically like kind of what you're looking at, or maybe you can go a little steeper if you want. Right, but you can all see it's clear downtrend. So communications, probably the best place to be right now, in my opinion, in terms of weighting. And so here you have XLB and the S&P. It was also kind of on a downtrend, outperforming the S&P, and now the S&P has been outperforming as of late. And then finally, versus energy. Also, again, since the end of last year, you saw massive outperforming of energy versus the S&P, and now we're in a clear, like it looks, I mean, clear broken trend, higher highs being made, and so that's what we'll be looking at also. And then financials, look at the financials, you can see that. So what the point is that this shows you the like how things are starting to change. Like look right here, the financials starting to really curl up. And then if you come back down to the SPY versus financials had been underperforming, and then now they're starting to outperform. All right, so that's a look at the sectors. I definitely think, obviously, communications, communication services, that's going to be the strongest place to be, as well as healthcare, and then I think technology for now is has been a good place to be. And we'll just kind of see on some of these other ones as we go forward. So the next time we come back to sector views, I'm going to check these things that I had flagged before. So that's the Tuesday sector view. This is Markets for Millennials. Go ahead and hit that like button, and share and subscribe if it's something that you thought was interesting and helpful. And I hope you guys have a great day, and I'll see you guys next time.